Good morning, everyone. Thank you for joining us today. My name is Ron Stewart. I'm the Managing Director of Equity Research at Red Cloud Securities. I'm delighted to be the host this morning to have Morgan Lekstrom, the president of NexGold, present and feature what they're doing with their exciting Goliath project in Ontario. During today's webinar, you're going to hear the company's plans to develop the mine and move the exploration forward on this exciting project. We're happy to answer any questions that you might have at the end. All you have to do is put them into the chat box at any time during the presentation, and we will get to as many of them as we can. Before we kick things off, we need to discuss a few things. First of all, during this webinar, there's going to be forward-looking statements. The company releases a disclosure about their forward-looking statements on slide 2 of their presentation, and we invite you to have a look at that. There's also considerably more information about the company on their website. You can find that at www.treasurymetals.com. Treasury Metals was the predecessor company to NexGold. NexGold is branded as a new name that just completed a merger. So you can find more information on the company there. From Red Cloud Securities perspective, this webinar is for information purposes only. It should not be considered a solicitation to buy or sell securities. Participants should rely on their own investigation, do your own due diligence, and seek out your own professional counsel in terms of making investments. You can also access our research on the product to see what our outlook is. It's located at Red Cloud Securities for disclosures. With that said, I'm going to turn the webinar over to Morgan to tell us about the NexGold story.
Thanks, Ron. Thanks for having me in this nice early morning here in Vancouver. It's about 6 a.m., which is always a great time to speak to people before the market, and excited to be here. Look, I just wanted to back up and just say that the website's www.nexgold.com. The Treasury Metals one would be taken down now. But one of the neat things about this industry and about the gold space, just before I get into this, is that you're at this interesting kind of fulcrum in time where you now have a rising gold price, and you actually have a very limited amount of permitted or permittable tier 1 jurisdiction gold mines that will produce over 100,000 ounces a year. And we saw this at the last conference where mid-tiers were, a couple of years ago looking for 250,000 ounce plus production potential per year. And now they've gone down to 100,000 potential ounce production per year. And you're going, okay, this is very interesting. So this is just a nice segue into why NexGold, why now, and what we're going to do to be that next leader in the mid-tier space. So jump in, and we already talked about the forward-looking statement, so I can bypass that one. Thanks for that, Ron. So really, what's the philosophy of NexGold? Is to be a near-term production potential company, a platform for consolidation, with a renewed exploration focus, and being well capitalized. So let's start with path to production. Goliath is a 3 million ounce northwestern Ontario gold deposit that has a federal permit in place, that is finalizing its provincial permits, that will produce 116,000 ounces a year for the first 7 years, or life of mine over 100,000 ounces per year. Why is that important? Well, free cash flow at $2,150 gold, and let me remind you, we're almost at $2,600 gold. At $2,150 gold, we will have a net present value of $652 million with a 41.5% IRR. So again, why is that important? Well, Northwestern Ontario, safe jurisdiction, asset producing above, that will produce above that 100,000 ounce per year threshold. But the other thing is we'll do it for under $400 million CapEx. Right now, our current CapEx is set at $335 million. Again, the idea of NexGold, bite-sized financeable projects that are in tier 1 jurisdictions like the Goliath project, that we have that builder team in place to do it. I'll explain the team here in the next couple of slides. So that's our what we call our base shelf project, the bottom of the pyramid, ready to go. We're looking at shovels in the ground in 16 months. Again, I'll get into this more as we go through the presentation. And what do I mean by platform for consolidation? Well, we're looking at how do we use the buy-build strategy that our significant investor, Frank Justra, has used over and over and over again to buy projects like this that are near-term construction or near-term production, put together a much larger company on a quick path to 400,000 to 500,000 ounces a year. And I'll show you how we're going to do that here shortly. And renewed exploration focus for us, that's actually one of the key points for NexGold. We have not only 2 projects together that combine to be the Goliath project, the Goldland and the Goliath project. We have a 65-kilometer strike that we're going to talk about here in a minute, and how we're going to start exploring and creating quite a bit of news flow. We have over $12 million in the bank currently, and we are very well capitalized to continue to grow this company. Clicking. Location, Northwestern Ontario, our main project, Goliath. That is beside Dryden, Ontario. There is nothing from the mining sense within 250 kilometers, i.e. there is nothing that will be built when we are built within 250 kilometers, which means this stands a significant chance of being a hub and spoke model as well in the future. A bit about the board and management. And I always love this slide when you get into juniors and companies and they go, we got the greatest team in the world. What I would like to say is we have the greatest builder team in the world. We have the team that can build a company and build a mine, which is a very key thing in this industry. Jim Gowan's the ex-president of Barrick, ex-CEO of De Beers. He was president of Placer Dome. And if you're unfamiliar with these companies, these are some of the biggest mining companies in the world. Jim is well known around industry for being probably the most prolific mine builder in Canadian history. Well, hey, that's our chairman. That is someone that can help guide us from the board level. Jeremy Wyeth, 35 years building mines in Canada, Africa, Brazil, all over the world successfully, over and over and over. Myself, 18 years between building mines and capital markets. You're kind of getting the point. We have the right team, the right place, the right time, with the right backer and people like Frank Justra, and we'll go into cap structure here in a minute. Oren Baranowski, our CFO, again, has been through a build, has been through a financing of a build, has understood operations, has been through that entire process many times. Same with Rachel. Rachel Pinot is, I'd say, one of the most interesting people in the sense that I've never met someone with such great relations with First Nations and ability to drive sustainability forward. Again, something very important in how we conduct business as NexGold going forward, as well as when we build our projects, those relations that really pull forward. So a very strong team in how we execute the company. Board of directors, again, stacked up with the right people. Michelle Ashby, significant experience in the capital markets. Paul McRae used to be the advisor to Lucas Lundin, his technical advisor. So you have, again, another builder. Margot Naughty, another financial type person. Andrew Bowering, who's built companies and sold them. Rob McLeod on the technical geology side. So again, you have this kind of depth and breadth of people that know how to drive a company forward. But let's talk about the cap structure. Frank Justra, 10.1% between Frank, Extract Capital, Sprott Asset Management, and a swath of other people in here, as well as institutional. We're just about 60% tightly held. This is an important thing to remember. When we merged the companies together, we were only about 25 to 30%. So we've significantly increased the ownership of the company with tight hands. We've added some key features in, like Frank Justra. We've added capital to this. It says 11, sorry, this slide wasn't updated. We had some money come in, so we're at $12 million. We have 76 million shares. So again, a very tight structure. We are able to move this company forward quickly. We're able to not only bring it through the steps, and I know, Ron, you're probably going to say that the research coverage, I'd like to say that Red Cloud did announce research coverage on us, which I'm very thankful for. I have not updated this last slide yet, and I apologize for that. But we are covered now by 3 research institutions that we're very proud of. So we talk about jurisdiction and, you know, the best place to find a mine and all that stuff is in the head frame of another mine. Well, what I like about this, I'm actually going to skip over this slide, because what I like about this is this only came together in the last 4 years. Before that, Goliath was a standalone deposit. Goldland was its own deposit. Those came together about 4 years ago. And about 3 years ago, the company went on embarked on the journey of putting together a team that can build, a team that can actually take this through into production. But one thing we stopped doing is we stopped looking for more. You know, you got 3 million ounces. We're like, that's really good. 2.1 in the M&I category. Again, a strong resource, buildable, with power lines through the property, Trans-Canada Highway right on the edge of the property. So from a location standpoint, you can't get better. I've worked in every continent on the world, and there's not many places I would say that I've seen this good of infrastructure. Now, what's really key here is that not only do we have these two deposits here in the Goliath project and in the Goldman project, those again combined to meet the Goliath complex, there is 65 kilometers of undiscovered terrain here. All these yellow dots are occurrences of gold. So as you can see, there's a significant amount of exploration potential. We just launched a 25,000 meter drill campaign. We did that because not only do we see that this thing is going to grow, we think it's a much bigger district. While we're doing our feasibility study, while we're completing our final permitting, while we're finishing our IBAs and coming to that construction decision in Q3, I'll run you through the timelines at the very end. But one of the key things for us is when you look at the Lassonde curve, and for people that are not familiar with the Lassonde curve, it dictates what an exploration to a producer looks like through its ebbs and flows of the financial side, value creation, value destruction, value creation. Well, what's really neat about NexGold is we're right at the bottom of that curve coming into the value creation side. So we said, why not dovetail on a really nice exploration program to show that, hey, this is going to grow after we're in production. This is going to grow significantly. As I talked about the infrastructure, again, you can't get much better from an infrastructure standpoint. That nice 65 kilometer strike. This thing has a lot more potential than what has already been put out. But on the pre-feasibility highlights, I'd like to say, you know, our feasibility studies coming out in Q1. Our construction decision will be Q3. We are one of the most advanced stage projects in Canada. Think about that. Gold rising $2,500 to $2,600. You have a project that can not only take advantage of that, but can expand and is probably one of the top 3 buildable projects, or is one of the top 3 buildable projects in Canada. It is one of the more near-term projects in Canada that is permitted, that is finalizing its little bits of permits that it needs to get into construction. So it's one of those rare cases where I like to say we're actually going to build a mine that gets me pretty excited, gets me up in the morning. And I'm like, oh, great, we're going to build a mine. This is going to be fun. But also, we're going to grow the company significantly. As I rattled through the financials earlier, we're going to cash flow between $150 and $200 million a year at $2,150 gold. That's after tax. That is, in a sense of a business, I look at that type of cash flow and the type of rising gold and the macroeconomic situation in the world as a really great position for NexGold and NexGold shareholders to be in. So a lot of growth potential, low capex, right builder team in place, and the ability to expand, which we are now with our 25,000 meter drill program. We should start seeing results in October, November, and thereon through the next 9 to 12 months. So we're doing 25,000 meters to not, again, like I said, not only show expansion potential, but make new discoveries. Both deposits are still wide open, which means we haven't found the bottom of them and we haven't found the extent of them. But on our production profile, you see it ramps up into year 7. These are producing actually a lot higher numbers. Year 10 to 13 are producing stockpiles, or going through our low-grade stockpiles. There's the opportunity for us. We now have a mill, once we're built, a 6,500 ton per day mill in an area of 200, that nothing exists for 250 kilometers from a milling capability standpoint. So we have the ability to be a hub and spoke project that has a lot of other little projects around us that could feed in. like I always say, if you build it, they will come. Well, we already have the project. We build the mill. It gives a lot more opportunity to the area as well. I love that there's a lot of explorers in the area, because this only enhances NexGold's project in the future as we can start offsetting that last year 10 to 13, which we know we're going to anyways. I like to say at $2,500 gold, we're a $1 billion post-tax MPV company. Pre-tax, we're about 1.1, 1.2 billion with a very high IRR. But in this industry, we don't go off 2,500. We go off 1950 to 2150 gold. I'd like to say 2150 is a pretty good bank to go off of. The key here for us is not only the production profile and the growth platform, the development path, the speed in which it's going now. You're getting into a company that had gone through that entire phase of finding the ore body, the entire phase of permitting with the EA, which takes 5 to 7 years in some cases, and all that value depletion that happens. We're right on the bottom of that curve, showing, hey, we're going to have a lot of value coming out of this with people like Frank Justra and Extract Capital and Sprott. So you have, again, a super strong shareholder base that will be there throughout the entire lifespan of this company, which I'm very proud to say we, as someone that deals and talks to our shareholders, everyone is very excited for the next steps in the future of this company. Move past it. I will touch on Niblack. This is a project that we have. It was a part of a merger that we did. Southeast Alaska, 6 million ton VMS deposit. Southeast Alaska is known well for projects like Greens Creek in Hecla and these very high grade copper, gold, zinc deposits. This is something that we are on care and maintenance with, but has very, very strong exploration potential, has production potential in the future through a direct ship method. So again, it's something we'll be revisiting, but our main focus truly is expanding and taking that Goliath complex into production. So I said, what's the philosophy of NexGold? Obviously getting into a production state, growing the company, utilizing that expert team of builders that we have, which are very, very, almost more difficult to find in that sense than an actual project. So we're looking, not only to grow our current resources and grow into that production state, but we're looking to expand the company. We want to be that go-to mid-tier that has the right backers, the right builders, the right marketing, the right investors. So I encourage you to join us for that journey, because it's just getting started. Thank you very much.
Thank you, Morgan. That was really interesting, and certainly for the listeners, I can expect that they understand why we're enthusiastic about the project. You've done a great job, and you've got a great team. We've got a few questions here that have come in during the course of the call. Can you explain to us the terms and what the convertible was, or where that came from?
Yeah, so the convertible was a legacy convert into the company. It's been around for a number of years. It's struck at a 9.7% interest rate. It's with Extract Capital, and if you notice that Extract is 9.6% on our slide deck, partially diluted, they're about 17%. So the Extract team are significant shareholders with a lot of belief. The convertible doesn't convert for about 1.75 years from now at a price of $3.84. So they work with us day in, day out. Extract's been an amazing shareholder. They've taken part in every equity raise we've done so far. So, but look, we're not concerned about it. We think it's definitely a collaborative process with Extract. So it's something that in the future, by the time we're about 16 months away from putting shovels in the ground, which, so Q3, we're looking at how we do that. So I'm not concerned about our convertible, and also that we have a very strong shareholder in there that wants to work with us.
Great. No, thank you. Another question came in is, can you explain to us, it's an aggressive development schedule. What's the status of the permitting to move forward? So
federal EA is in place, which is one of the big ones. So as you walk through permitting in Ontario or other jurisdictions, you need your impact or industrial permits, you need your water permits. These all kind of come in as you go into the mine build. We're looking at end of Q2, Q3 of getting those permits now. Our team's done about 4 to 5 years of baseline studies. We've done all the required components. We've got those permits. We've been in negotiations and speaking with the government. We've been speaking with the government. We have a very clear path. We understand the timelines, and we are consistently submitting those permits. So those we do expect, and we have indicated that it will be construction decision by Q3, which means, and for people that aren't familiar with permitting, when you get into permitting, you actually have to do a lot of the detailed engineering for things like tailings, water management systems, all that. So we've done a lot of that engineering already, and that is what's feeding. And again, I go back to a builder team, people that have done this before. We aren't going to get tripped up in the process because we've done this over and over and over. Good.
What about your relations with the First Nations and their support? Any kind of any insights on that?
Yeah, we just signed an actual an exploration agreement with what's called the Wabigoon First Nation. They're the closest impacted community to Goliath. That's been a really strong asset with Rachel. She has just really embedded herself in the community. I would always like to say I would refer to her on speak about the relationship, but I know it's a very strong one with her and with our team, and we're looking at driving into those IBAs and hopefully signing in the very near future. But I can say this: we can't do this without our First Nations partners. This is really a collaborative process, and I'm very impressed, and I think our team is very impressed with the collaboration of both the First Nations and our side as well as the government. So we're going to keep going through the collaborative process, and we see a really nice path forward.
So turning to exploration for a minute, you're talking, you've got a 3 million ounce resource, and the reserve is maybe half of that or thereabouts. What's the potential to transfer some of those resources into reserves? What's the growth potential that you see existing in the current resource?
Yeah, that's a great question. Look, our current permit allows us to go up to about 7,500 tons a day. We are undergoing studies to look at how we increase that during the life of mine, which will pull a lot of those resources into reserve categories. So we do believe that, as you see with most mining companies, they start with X and then they end up with Y or Z. It's much bigger. There is a really nice path to pulling those ounces in. But again, we're focused on what we're permitted for and what clearly is strong economics currently. But on the exploration side, look, there's a lot of companies, and you see this with the Barracks, and Caliber's a prime example of another mining company that when they build their mill, they find these little satellite deposits, 200,000 ounces here, 100,000 ounces there. Those are littered all over our property. We have them. Miller's one of them. We're looking at Fold Nose, which we've done exploration on, which could be another 75 to 100,000 ounces. And you would think that, although that's pretty inconsequential, that's how a lot of these companies have built 15, 20-year mines. So for us, that's why we're focusing on the exploration. We see the potential in the district, and we're looking at expanding that here currently. We're drilling.
Listen, for our listeners here, I worked with Placer Dome for a number of years, and one of my jobs was to assess mine exploration targets. And we could find that by adding 150,000 ounces to an existing mine provided more return on investment than going out and finding a new 2 million ounce deposit. So I'm just reinforcing what Morgan just said in terms of the economic benefit of finding ounces near an existing processing facility. So that, I understand that fully. Just in terms of your exploration though, Morgan, you said 25,000 meters. How many drills does that entail? And is it a phased program? What kind of approach are you taking?
It's a good question. We are taking a phased approach. The market up until probably a little bit ago here, even now, is still a little fickle. We want to make sure we have the right capital allocation. So we're taking a phased approach to it. We're fully funded for the drill program. And through that phased approach and you probably know this better than most, Ron, is when you're doing exploration, you don't want to just go 4 drills and go everywhere. We're looking 40% of our exploration budget is actually dedicated to new discoveries. So we want to systematically work into some of these discoveries. We want to drill looking for them. We have a pretty good line of sight on a lot of them. But again, if we start going gangbusters and then you find something brand new, how are you going to go at it? So again, phase 1 is 4,000 to 5,000 meters at Interlakes. That's between the Goliath and Goldland deposits. That's about within that 25-kilometer area. And then it's going to be looking north of Goldland, which is about 5 to 10 kilometers, and then a little east. So you're doing these incremental step outs. Then we're going to go back into the ore bodies, start testing more depth potential, a little more along strike. Again, to the question of how these expand, they expand pretty quick, especially when it's there.
Excellent. And what's the all-in cost for drilling at the project?
We like to say it's $275, but I give a lot of credit to our director of exploration, Adam Larson, who's been in this area, lives there. He says 275, so he under promises and over delivers. It's more like 230 to 240, very high there, but 275 is what we've budgeted.
Fair enough. Look, that's the questions that have been posted into our chat room. So, if there's any other additional questions, I welcome the opportunity to put them forward now. Otherwise, I see real good potential for you to move forward in short order and develop into a going concern gold mine. I really am enthusiastic about your outlook.
Thanks, Ron. And we were just at that conference at Beaver Creek, and I found it, like I said at the start, I found it really interesting what mid-tier started to look for now, and how important permitting is, especially in tier 1 jurisdictions, like that. We're so close to being at a build phase. Look, I think that we have a tiger by the tail with a project that had been around for a long time, that had gone through all the phases, and now that we've been able to amalgamate it into one company with the right aspects, the right investors, we're not only going to drive this project forward, we're going to drive the company forward. Our target is to find projects that produce between 80 and 120,000 ounces per year, that are permitted or near permitted, that have a sub 400 million capex. This is all where Goliath fits very nicely. But these are companies and projects around that, companies like Placer, companies like Barrick. This is how they started. This is how companies like Calibre started, New Gold. You don't start building a 250,000 ounce per year producer mine. You start with bite-sized chunks that are financeable and buildable, and that's our model.
Great. We've just had a couple more questions roll in while you were talking. You mentioned that the company has a growth strategy going forward. What are you looking for in terms of future investments? Are they equities or royalties, or what exactly have you discussed in terms of your investment strategy?
So as far as when you go to raise money, there's multiple ways, especially with a project that is going to be a producing gold mine. So there's optionality with debt, there's optionality with royalties, there is optionality with streams, forward selling gold, that kind of stuff. You can get pretty creative when you do these types of financings. We have 76 million shares, so we have a very tight share structure, and we have very supportive shareholders. So I always like to say that, people worry about dilution. Someone wise once told me that it's only dilution if it doesn't add value and the share price goes down, right? So you see companies, I always like to use Dolly Varden as a really nice example of something that, you had a very strong leader at the front that took it from 20 cents to $1.10 and a $300 million market cap and never did a down round of financing. So its equity holders continually win. That is, that's a strategy I'm definitely going to explore with us. But currently we have a lot of optionality on how we raise money. And that's something that I can say is fairly rare, because not many projects and companies get to this stage.
Fair enough. I think our questioner is curious to know what you're looking for in terms of other investments, and whether or not you'd consider looking at projects outside of Canada.
Look, I like to say we have a tier one build team, a tier one jurisdiction. And, I say tier one projects now used to have this nomenclature of, they got to be 250,000 ounces per year production. I think I would consider a tier one project now something that's buildable, financeable, and that can produce over 100,000 ounces a year. Because you've depleted some of these massive resources. We are looking in Canada. We like Canada a lot. We like North America currently. I would say with Jeremy and Jim's and my expertise, I've worked on every continent for companies like Freeport and Rio Tinto in Mongolia, and I put mines production in Africa, as is a lot of our team. So it wouldn't be out of the question. But our current focus is 80 to 120,000 ounce potential per year per project, sub 400 million capex, North America, most likely Canada only to start, but potentially the US. So that's really what we're looking for. And, there are the joys of having strong shareholders allow us to go hunting for projects that, as we advance Goliath into that production state, we're gonna be looking at a significantly different company. A good example of that is a company called Orla Mining in Mexico. They produce 115,000 ounces, 120,000 ounces a year. They're a 1.7 billion market cap company. Their resource is bigger. They have 9 million ounces. But again, they have that production profile that we're looking at. There's a reason we're looking for that. This builds companies. This builds shareholder value. This builds equity value. And it can do it in a very bite-sized way.
Okay, fair enough. Changing directions a little bit, one of our listeners is curious as to whether or not you've looked at using AI as a method to help exploration and focus on some targets.
Yeah, and robots. No. You actually, I get snarky about it, but look, I'm a huge computer nerd and a sci-fi nerd, so I actually think we'll have robots on the ground probably a lot sooner. The answer is yes, we're looking at different AI methods. The answer is no, that we haven't employed them yet. We have a lot of geophysics that has been done over this property, but it is not out of question that we will potentially use AI in the future. AI is very good at statistical geological analysis and correlation. So for us, that is something we will consider, but currently we haven't employed.
Morgan, something that one of our questioners touched on and whatnot, and I thought I might just allow you to elaborate a little bit. Are there, in terms of financing, are there any byproduct credits related to Goliath that might provide you some flexibility?
Yeah, that's a good question, Ron. I should touch on that more often. There is a silver credit here that's really not included in the economics. So there's 3.3 million ounces of silver. There is silver at Goldland. We haven't put that into a resource yet. That will come out during the feasibility study that we think will add to it. I like to say that generally in feasibility studies, you hone in on the grade. It usually goes up a little bit and your ounces go down a little bit. But I think, in this case, with our credits that we hadn't included in our PFS, there is an option. You can stream things like silver. Silver going to $30, and you get a produced reserve of 1.4, 1.5 million ounces. You can bring in 25, 30 million US dollars pretty quick. So that, or even 15 million. These are creative financing methods. So yes, there are streaming credits out of there that we could look at utilizing, but it's about timing for utilizing those.
No, listen, I appreciate that. That's pretty much it for the people with questions, but they were all very good. I really appreciate everybody's contribution to clarifying some of these things. And what we'd like to do is certainly demonstrate that, Morgan is available to answer questions anytime, really. And so am I. We're here to help you understand what potential opportunity there is here. Morgan, we really appreciate you getting up very early in the morning to do this. You're wide awake now. And thank you for participating in our webinar this morning.
Yeah, look, Ron, I got to say, and a nice credit to you as well for the listeners that are on listening. To be in the presence of someone like Ron Stewart, who is well recognized in the industry as a very top level analyst, top level geologist, someone that has been through, you don't get gray hair for no reason. I like to say, and you earned them.
I don't have any hair left.
Well, so you earned every one of them, and then you lost them because there's too much experience there. But like, look, you know, again, it's a pleasure and an honor to be here, Ron, and thank you very much for the nice words and the coverage. So we're very happy to work with you going forward and drive this company forward.
Morgan, thank you very much. Best to all of your team and whatnot. We look forward to updates as they come in.
Thank you very much.